Hi, this is Brent with Trade Therapy, and welcome to the Trading Couch. We're talking about SMCI, our Clarity Spotlight last week. Really a chart that has gone through repair after a really deep markdown process. It repaired itself and is now rebuilding. We'll start with a look back and we'll talk about when the burden really flipped to sellers to prove that there was more downside left. We'll confirm the posture on the weekly and really drill down into a daily. You'll know what we're looking at and what we're watching next and how to manage risk if the character changes. This is a chart from June, a weekly chart from June. The last time we looked at SMCI, and we could see after this vertical move here, it really fell back down into this accumulation zone that had formed after this markdown process, right at the same level that SMCI reaccumulated at during the previous cycle. That's very common to see markdown processes end at those levels. And so this repair process had been taking place after this vertical move. We saw this corrective back test here, but then the strong candle and this change of character candle that came back and reclaimed this area right here. This white dotted line is the point of control. It's a very important level. You can see that this change of character on volume came up and retook all of these moving averages. You can see some compression, some back testing. Roughly about 50% of that candle was back tested, and the moving averages forming support and starting to see participation stepping up on higher volumes as these up thrusts started to push higher. That's where we left off in June. We were looking to see if that long side was really going to step in and if SMCI was ready to extend higher out of this reclaim level. That's where we left off in June. And if we jump over to a current weekly chart, this is the weekly from October. You can see here's that change of character candle and that really important reclaim level of the big volume shelf and the volume point of control right there, that it did get that volume breakout. It did break out on volume participation beginning to come in and support it, only to come back and back test it. So not uncommon to see compression at this level, really tight base forming at the point of control, now seeing it providing that support that we were looking for as this level was reclaimed back in June to provide support for professionals to come in and trade against. It's important to consider that this split from what was previously resistance and testing the underside of this volume shelf, converting that over to now support and testing the top side of this volume shelf gives professional money something to trade against, which is this shelf being lost. If for some reason we were to see failure of this level, see shorter term moving averages beginning to curl over, we were to see any large commitments to sponsoring the downside of the trade, similar to what we saw during this markdown process, we were to see big volumes sponsoring the downside of that trade, then professionals will stop out. So they'll place their stops right under all of this support, volume shelf support, all of the moving averages, and the support of this most recent back test here. That's not our primary expectation. We believe that this support has been back tested. If we dive into the daily, we can look even closer into this really compact base that has formed right here, that after the accumulation structure and the back test of that base, the bulls push price up into the top of this range, testing this market structure peak right here, only to come back and then retest that level that was claimed in the top side of this volume shelf here. All of this happening right at the 618 Fibonacci level. We see that the testing of the local high now, a series of short positions have formed, and we're looking for some sort of a push higher up out of this range. So we talked about what the downside would look like. Let's talk about a little bit about what continuation would look like. So what would success look like out of this level? We would look for a price to get up above and retake these peaks, move up into that Fibonacci level that was right at this previous distribution base here, go up, test that, come back and back test the now rising moving averages, and then push off of that level and move up into a higher Fibonacci levels and retake and test all-time highs from here. That's what success would look like. We're not in this trade. We're not in any semiconductor trades right now, so we don't have skin in the game, but very interesting setup, looks very attractive. This is a professional entry right here, so we're going to be watching it very closely. That's all the time we've got for SMCI this week. We'll see you next week.